Pete, so I teed this up with Kramer. While I've still got plenty of worries, he says, two of the biggest have now been taken off the table. The Fed's going to remain accommodative, and Evergrande, okay. So that situation doesn't seem like it's going to be contagious around the world. So are we good? Are we good again?
I still worry, though, Scott. I mean, that's what we do for a living, right? I mean, I think one of the biggest concerns still has to be Delta, what other variants are maybe potentially out there. And I think that's something that's going to hang over us for a while. And it's because we're still fresh, just pulling out of this thing, hopefully. But it doesn't mean it's completely gone. And it doesn't mean that can't still be a factor in the market. So, I'm cautious. I like what we're seeing. Obviously, when we see that kind of a bounce and the hurry that we've seen, we talk about velocity all the time, Scott. And this is about as much velocity as you can imagine. We were down nearly 1,000 points just days ago, closed down 600. And all we do for the last couple of days is just absolutely rocket to the upside. We watched volatility come back down from almost 29 all the way back underneath 19. So there's a lot going on within the market itself, and I think there's comfort levels that people are getting. I think the most interesting thing for me, though, Scott, is this. The uniformity of the move to the downside, it wasn't just one single sector that was dragging everything down, but that uniform move to the downside followed by this uniform move to the upside. And great participation from materials, from energy, from financials, from industrials. It's just been a really, really, I think from the standpoint of healthy, I think it's healthy that it's not just one area that's pulling us down or pushing us back up.
All right, so what a difference a few days make. Right, Josh? So we're I think thinking that Evergrande is not going to be China's Lehman moment. The head of UBS says not keeping him up at night. Jay Powell yesterday says, okay, the taper's getting closer. Leisman made, I think, the best point of all and really put all of this into perspective yesterday for us when he said they're still doing more than what QE2 was, even if they start tapering bond purchases. So you're still going to be awash in liquidity. Pete talks about Delta variant, still cautious about that. Several companies are starting to look past it. Southwest Airlines, they think it's peaked. Carnival Cruise says they're on pace to restart 50% of the fleet by October. Merck sees the potential for a COVID antiviral approval by the end of the year. Darden does a beat and a raise, new record high for that stock today. Same question I asked Pete at the top. Are we good? So we forget about what happened a few days ago. We're good?
I mean, as tempting as it would be to just be like, yeah, we're good, as we all know, the next thing that shocks the market is not something that's on anybody's list of things to worry about. By definition, it's always the exogenous thing that you're not thinking about. So it ain't going to be inflation. It ain't going to be the Fed. It's going to be something like Evergrande that comes out of nowhere, and that will produce volatility. But I think on this show we got it right, Judge. If anybody wants to rewind the tape and see what we were saying on Tuesday in the wake of that horrible day, we were laughing. I said I was a hungry hippo when you asked me if I was still buying. I think, look, Warren Buffett, somebody asked him once, what's the most important trait of a good investor? He said if he had to choose between the two, he would take temperament over intelligence. Because everybody's intelligent, but not everybody has the temperament to compartmentalize, worries about Delta virus and this and that, and, look at the forest and not get too caught up in the individual trees. And the forest is healthy. At its low point this week, the percentage of S&P names that were still above their 50-day, so in a very short-term uptrend, fell to 20%. That was the lowest level that we've seen going back to last November. Historically, during the entirety of this rally, those moments where you get that washout in the percentage of stocks above their 50-day, that's where people have been paid for being intrepid and buying. So now look at today. The RSP is outperforming the SPY. The RSP is the Invesco equal weighted S&P. So it's up 1.7% versus 1.3% in the markets. It's a very healthy tape. And then you think about some of these stocks that are consumer oriented or cyclical. Discover and Capital One Financial, these are very sensitive to the environment for the consumers.
Okay,
they're going hog wild.
Let me stop you for a
Morgan
second.
Stanley, JPM2. Go ahead.
Let me just stop you for 2 seconds, because you say it's a very healthy tape. Those are the words you used. You still have 41% of the S&P 500 and 42% of the NASDAQ 100 in correction or worse. So there was a lot of technical damage done. There was a lot of damage done below the surface, and some of those stocks that got obliterated remain in need of oxygen.
They're ripping. Those are the stocks that got hit the hardest are ripping the hardest. The transports are up over 1.5% today. They may have bottomed. MGM looks amazing on an absolute basis. Relative to the other casinos, it's a god. Energy is up almost 3%. The hardest hit sectors are the ones that are ripping. I don't know how much more clear can I make this? So when we talk, look at Jets, Jets, ETF, airlines. Look at Live Nation about to make a new record high. The Delta worries that have crushed those stocks all summer, that's fading. These stocks are breaking back out.
So you answered my question.
I'm just making the point.
You answered my question with a yes.
Yeah, I'm just.
When I say, are we good?
I just want to.
You're saying yes because you just built the case for why we are.
Because we're always only just good for now. The next thing will be the next thing. And so when I talk about temperament, you have to cleanse your timeline of the people who speak in the most extreme terms and the people who go out in a VIX spike and try to scare everybody else into signing up for their newsletter. That you can't have that in your life. If you do, you're not going to make the most of the next Evergrande scare. You will not be there when you need to with the right attitude if you surround yourself by the most extreme voices.